Hello and welcome. If your business was negatively impacted during COVID-19, it might be eligible to retroactively claim the Employee Retention Tax Credit. In this presentation, you will learn more about how to determine your eligibility and how to file. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute, an attorney-client, or any other advisory relationship. Reproduction of this information is expressly prohibited. Only non-commercial uses of this work are permitted. In today's conversation, we will discuss the Employee Retention Tax Credit, or ERTC. Here are some key points about the ERTC. It is easier than PPP and is payroll-based. The refund has no constraints and no forgiveness is needed. And it covers March 13, 2020 through September 30, 2021. There are special considerations for recovery startups. Most small businesses, including nonprofits, are eligible for the program. However, government agencies and public school districts are not eligible. The ERTC covers the period from March 13, 2020 to September 30, 2021. While the ERTC program ended on September 20, 2021, you can apply for the credit for 2020 and 2021 retroactively through a simple update to your quarterly Form 941 that is submitted for all of your employees to the IRS. There is a slightly different rule for 2020 and 2021. It is important to note that in August 2021, a new criteria and process was set up for certain businesses that qualify as a recovery startup. These businesses are able to apply for the credit in both quarters 3 and 4 of 2021. If you have one of the following, you could be eligible for ERTC. A closure due to local or state government order. A decrease in the number of children served related to a government order. Or a decrease in revenue from 2019 to 2020, or from 2019 to 2021. The exception is PPP, or FFCRA. How do you determine the quarters that qualify for ERTC? When determining eligibility for ERTC, you must first calculate the decline in revenue you had for each quarter in 2020 and 2021 compared to the same quarter in 2019. In our example, all quarters in 2019 had $100,000 gross revenue. For 2020, we did not need the calculated loss for quarter 1, since ERTC did not begin until quarter 2. 2020. To begin to qualify, there must be a reduction in gross wages of more than 50%. Quarter 2 has a reduction of 52%, therefore that quarter qualifies. You continue to qualify per quarter if there is a loss of income of more than 20%. In our example, quarter 3 has a 25% reduction and qualifies. In quarter 4, there was an increase of 5%. This quarter also qualifies, as the rule states that you will receive credit for the quarter immediately following the last quarter that has a loss of 20% or more, even if there is an increase for that quarter. For 2021, the rule changes, and there only needs to be a loss of over 20% per quarter to qualify. In our example 2021, quarter 1 did not have a loss of revenue compared to 2019 quarter 1, and does not qualify. 2021 quarter 2 has a 22% loss, and qualifies. Quarter 3 has a 10% increase, but qualifies, as the rule states that you will receive credit for the quarter immediately following the last quarter that has a loss of more than 20%, even if there is an increase for that quarter. The program ended September 30, 2021, and quarter 4 does not apply. How does the ERTC benefit you? For the period beginning March 13 through December 31, 2020, up to 50% of $10,000 in wages per employee for the year. For 2020, per employee, annual maximum is $5,000. For the period January 1 through September 30, 2021, 70% of up to $10,000 in wages per employee per quarter. 2021 per employee quarterly maximum is $7,000, and 2021 per employee annual maximum is $21,000. Let's look at how you calculate the credit due per employee. To determine how much credit you will receive per employee, you will need a payroll report that shows each employee's gross wages by quarter for both 2020 and 2021. Your payroll company can help you with this. For 2020, you will receive a credit of 50% of gross wages per employee per quarter. In 2020, there is a maximum of $10,000 in gross wages allowed for the employee per year. In our example, we assume we have met the qualifying reduction in gross revenue for each applicable quarter. This example shows that this employee had gross wages of $5,000 for each quarter in both 2020 and 2021. Keep in mind that for 2020, only $10,000 in wages for the year per employee qualifies. In 2020, quarter 1 does not count, as the program begins in quarter 2. For quarters 2, 3, and 4, this employee has earned a total of $15,000, but only $10,000 of that qualifies for the 50% credit. This means that for 2020, the only wages that qualify are quarter 2 and quarter 3, and there is a 50% credit for each quarter. This gives us a $2,500 credit per employee per quarter for a total credit for 2020 of $5,000. In 2021, there are 2 rule changes. You will now earn a 70% credit of gross wages compared to 50% in 2020. And the $10,000 limit is per quarter per employee, not per year. In our example, the employee has gross wages of $5,000 per quarter. They have not reached the $10,000 maximum per quarter, and all of their wages count for the 70% credit per quarter. For quarters 1, 2, and 3, there is a credit of $3,500 per quarter, which is 70% of $5,000 per quarter. Quarter 4 is not eligible for credit, as the program ended September 30, 2021. The $3,500 credit per employee per quarter totals a credit of $10,500 for that employee in 2021. How do you claim the benefit? You will need to keep a record for yourself, showing the reduction in gross revenue per quarter for 2020 and 2021, and each employee's gross wages per quarter per year. You will keep these documents in case of an audit. You will then provide your payroll company or tax preparer with the credits you have calculated per quarter, per year. A 941X form must be filed for each quarter that you are due a credit. Due to the large number of claims being submitted, there is currently a 6 to 9 month wait before you will receive checks, which will be issued per quarter. For more information, visit the DCL Thriving Childcare Business Academy website. If you have questions about the Academy, send them to the email address on the screen. And be sure to visit the Civitas Strategies YouTube channel for more valuable resources to support you and your business.